Good afternoon, everybody, and welcome to our YouTube Live presentation, Trending Thursday. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. Always my pleasure to be here to give these presentations live in a streaming fashion. So glad that you're here. If you feel compelled to do so, by all means, please feel free to chat in. The more interactive this becomes, the more fun it becomes. And if you know anything about me, you know I love to have fun when I do a presentation. It's just what I do, all right? And you know something? I'm really good at it. Thank you all for being here, to taking the time out of your day to spend some time with me in my day. So again, Trending Thursdays. For any of you that are new, please don't forget to comment, like, and subscribe to our channel. Big thing for me is I like the comments. When you see Joey puts the videos out, by all means, please comment. If you like the content, let me know. If you don't like the content, don't put it in there. Well, you can put it in there. If you don't like the content, put it in. If there's things that you'd like to see more often, or other stories, particularly about any of the industry that we talk about in here, by all means, put that in. I am trying to grow the footprint on our YouTube channel. You are the guys and gals that can make that happen. By the way, talking about Joey, Joey is my producer. He sits side saddle with me to my right. Joey, say hi.
Hi.
There you go. He's the guy making all the magic happen with the lights and the camera, and I do all the action. But he does all the light and camera work in the background. Joey, I think you need to start putting some makeup on me, I think, because you're showing a whole bunch of gray and blemishes on the face and all that kind of stuff. So
You gotta take care of yourself, man.
I'm taking care of myself, but I just need you to hook me up.
Do a little better, huh?
Do a little better, put some makeup on or something. But Joey is here. Make sure that everything in the stream goes well, all that kind of thing. Any new people? I know Lisa says Glennisms. You know I will chat in with all of the things that you're talking about as well. Jake says, what a perfect day. Skiing all morning, then Glen tea in the afternoon. Ooh wee, gotta love it. Ooh wee, we're gonna take it viral, baby. We're gonna take ooh wee viral. You talk about a stock, you talk about VectorVest, you're gonna go ooh wee. That's what we do. We're gonna take it viral. Don't start, Rich. Excuse me, because Joey will put you in timeout if you start. We should start off with a big ooh-wee. Thank you for that, Jay. I know Jay is here. Lisa's here. Badger is here. Man, a lot of people here in the room. Thank you again for taking the time out of your day to be here. For those of you who may be brand new and may not be chatting as of yet, let me talk to you about what Trending Thursday is all about. We look at a lot of things that are in the news. We take that information, break it down through the VectorVest software. That is the software that we use. It's been around for 30 years. It's a market timing, well, it's more of a stock analysis and portfolio management system. That's what we do. We analyze over 8,000 stocks. I can help you analyze any stock, and at the end of this presentation, I will give you an opportunity to type in any stocks that you may be either investing in or managing or thinking about. I'm going to show you the power of the VectorVest software, how we can analyze it just like that. All right? So we look at the news, things that are making news. We look at those stories. We analyze it through the VectorVest software. We look at their graphs, and it's going to give you a better understanding of what's really going on with the graph. People will always try to talk you into buying stocks, no matter what's going on in the market. The VectorVest software is designed to keep you focused on what you really should be doing at any given time. You know I like Paul Harvey, right? And what did he always say in his presentations? He's going to show you the rest of the story. And that is what the VectorVest software is designed to do, to really give you the rest of the story behind whether you should be investing in that stock or not, or if you're holding the stock, whether you should continue holding it or think about getting rid of it to invest in another stock. Another things that come through with these sessions is you may pick up on stocks that you're not even investing in, that are making the news, that may be good opportunities to buy. So if you're here to learn more about what's going on in the market, you're in the right place. If you're here to learn about some stocks you can take a look at, you're in the right place. And if you're here to look at, well, should I be holding this stock or not? You're in the right place. So with all of that, let's get into how we start off these sessions. We always start off with utilizing the VectorVest software to talk about what's going on in the market. What I'm going to do is open up the VectorVest software for you. and I'm going to bring myself to the home page as well. This is what you see when you first open up the software. For those of you who are not subscribers, you're getting a glimpse as into some of the power and flexibility that the software has to offer. So what we always do, we analyze stocks, but we also time the market. Now, when I say time the market, we are trend followers. We keep you on the right side of the trend, whether it's bullish, whether it's bearish, or even sometimes when it's moving sideways. So we give you a good understanding of what's truly going on in the market so that when the people you talk about to your friends, or you look at on TV, or you get a news article, these are the things, again, people are going to always tell you to be buying stocks even when the market's moving down. Well, you like the stock at 30, you're going to love it at 20, go buy some more. Whoo-wee! No. The worst thing you can do is dollar cost average down. That's not what you want to do. Spend your money into stocks that are doing what you want them to do, which is go up in price, or if you're playing the market to the downside, find those stocks that are going down in price. So what we do is we look at what's going on in the market, and we have specific indicators to help you to make a better decision on whether or not it's okay or not okay to be in the market. So let's start off at our home page. We're looking at the VectorVest real-time data package where you can see what's going on tick by tick throughout the day. If you look at our quick list is going to show all of the major indices and what they're doing throughout the day. Notice that the Dow is slightly down, flat to down about 0.03%, pretty flat for the day. The NASDAQ, though, is down about 0.2%, and it's leading all of the major indices to the downside. Oh, but wait, we have the S&P 500, flat to slightly down. Oh, but the S&P 100 is slightly flat to up. And our VectorVest composite, and our composite is an indexed arithmetic average of all of the stocks that we track. Currently, we're tracking 8,262 stocks. And every stock in our database gets a buy, a sell, or a hold recommendation all the time. So when I look at the VectorVest composite, this price you see is an indexed arithmetic average of all of the stocks that we track. Because we track that many stocks, that's how we're able to effectively time the market. We're tracking the move of 8,262 stocks in one ticker symbol known as the VVC, indexed arithmetic average of all of the stocks that we track. Okay? So when I can look and see that the price of all of these stocks in one ticker symbol is trading at $48.67. Now, it's great to know this data, but we can see if it's moving up or down throughout the day. Notice that the VectorVest composite is the biggest mover out of all of the indices right now, down almost 0.3%. Now, let's move over a little bit more. Let's look at our color guard. Our color guard looks at three indicators, or three market timing indicators that we use for timing the market as well. The first one is that price of the VectorVest composite. The next one is called RT, stands for relative timing. This indicator is one of our core proprietary indicators, which is cast on a scale between 0 and 2. We make it simple. If the indicator that is cast on that scale is above the value of 1, it's favorable, and if it's below the value of 1, it's unfavorable. Makes it real simple. RT looks at the short-term price trend of the market. Is the market in an uptrend or not? Well, right now it's at 0.96, below the value of 1, so it's unfavorable, and it lets us know that the market right now is in a slight downtrend. The next indicator, the BSR, or buy to sell ratio. This indicator is not cast on a scale between 0 and 2, but if the indicator is above the value of 1, it's favorable, and the buy to sell ratio looks at the overall health of the market. I don't think there's anybody in this industry that has an indicator that looks at health of the market, but we have one called the buy to sell ratio. Well, how do we get this ratio? Remember, every stock in the database gets a buy, or sell, or a hold recommendation every day. Well, we look at the relationship of buy recommendations divided by sells. Currently, it's below the value of 1. So for every sell in the system, we have 9/10 of a buy. So right now, the market is showing signs of weakness because the buy to sell ratio is below the value of 1. Currently, we have more sell recommendations in the software than buys, and the market is showing signs of weakness. Now, We assign tiles based on week over week and day over day movement of all of these indicators. Currently, we have a yellow light in the price column. Well, that's because the price of the VectorVest composite is risen from 48.66 to 48.66.1 to 48.66.5. We're higher on a week over week basis by a very small part. Ew, it's now 666. Don't like that number. I'm a devout Christian. Don't like that number, not even a little bit. And it is lower on a day-over-day basis. The data is mixed. That's why we have a yellow light. So it's higher on a week-over-week basis, but lower on a day-over-day basis, yellow tile. Let's go to this red tile then. The red tile is because the movement of the buy-to-sell ratio is lower on a week-over-week basis from 1.19 to 0.90 and lower on a day-over-day basis from 0.97 to 0.90. This indicator has fallen on a week-over-week and day-over-day basis, and that's how it gets a red tile. To get a red tile, the indicator has to fall on both the week-over-week and day-over-day basis, and to get a green tile, the indicator has to rise on both the week-over-week and day-over-day basis. So based on these colors we get to every day, I can use this sort of like a traffic light. Out of 18 possible boxes that are here, 11 of them or so are yellow. So from the standpoint of a market timing perspective, if you're long in the market, this is a good time to just manage your trades. Let your stops manage your trades. This may not be a good time to buy new stocks, but if nothing else, don't be afraid to take profits on a stock that you own or mitigate losses on stocks that may be going against you. All right, so on our home page, right now we're saying VectorVest does not advocate buying any stocks at this time. We show you that by way of the color guard, more yellow than anything, this is a time to be cautious in the market. Now, once we have all of this information, we want to see what's making the market in this mode of being neutral. Well, let's get to our first story, which takes on what's going on in the news. Let's go to, there we go. Two things that are moving the markets. This is a news-driven market. Two things that are moving the markets. The tariffs with the Chinese, the trade war, and number two, interest rates. All right, those are the two main things that are moving the market. Interest rates, why? Are we going to get to another level where we're going to lower interest rates even more? The Fed's job, when it comes down to interest rates, is to make sure that work or jobs are good and that inflation is under control. The Fed's job is not to make sure that the market is doing well. So when we lower interest rates, it's a way to boost the economy to keep it running. Lower interest rates, when you borrow money, you have to pay back less money. It puts more money back in your pocket. It will boost an economy. Jobs are doing very well. More and more people are being employed, and that's a good thing. So with those two things in mind, in my thinking, the Fed should not still be reducing rates, but the reason why we are globally, we have the best economy across the globe, and we want to try to stay that way. And by dropping the interest rates, we are still bolstering our economy to be better than anybody else's economy globally. There's a downside to that. If we have a good economy and everybody else has got a crappy economy, what happens? Our dollar becomes stronger. If our dollar becomes stronger, people are not going to be willing to buy our products because they have to spend more money. So it's a double-edged sword in regards to what's going on. But the other side of what's going on in the market is the threat of the auto import tariffs remain despite lapsed deadline. President had until November 13th to decide whether to apply the duties. So if we scroll down, President Trump's decision to let a deadline impose tariffs on foreign auto imports lapse without taking action has left the auto industry puzzled over the White House next move. So, keeping that in mind, that could be affecting the market. Let's go to the next story. Wow, Joey. All right, let's go to the next story. Fed officials cut rates last month amid worries on trade, the same story we just talked about. Now you understand why they're interactive with each other and why it's affecting the market and global growth. Officials voted in October meeting to cut the short-term benchmark to its current range between 1.5 and 1.75. Despite the Fed rate cuts, though, on credit cards could go up. All right. And let's go into one more story in regards to this. How about this? Now, the Fed chief cut the rates. But here's one of the people that are in the Fed. Fed Mester says she didn't want to cut rates, but is now content with watch and wait. And so now there's a little bit of dissension within the Fed community in that whether or not we should continue to cut rates or not. Some of the Fed people are wanting to be a little bit more dovish, where it looks like right now the Fed chairman is wanting to be more hawkish and wants to continue to cut rates. But I think overall he's starting to come into fruition of let's just wait and see what goes on, especially what's going on with the trade. All right, so those are the three stories that look like could be affecting the market in an adverse way. Let's do this. Let's get back into the software. I know where I want to go. Let's go back into the software. Boom. And let's get to my watch list of stocks that we're going to look at today. From the market standpoint, we're going to look at two indicators and make sure I'm in the right. There we go. There we go. And there we go. There's my watch list. All right. So the two stocks that we're going to look at in regards to overall what's going on in the market is one, our VectorVest composite. 1112. That's not the right one. Where's my 1121? Really? 1121. There we go. Man, Joey, you just moving stuff around. That's all Joey's fault. Blame it on Joey. We're going to look at the VectorVest composite, which is that indexed arithmetic average of over 8,200 stocks, and one that most people will look at for gauging the market, the spiders, the S&P 500. So I'm going to look at these real quick. Let's put them on a graph. Right click, view the stock graph. All right, so here's the VectorVest composite. I'm going to put it on a 3-month graph. Remember the movement of over 8,200 stocks. The market was moving up nicely. I am looking at a moving average. I'm going to put on the exponential moving average of a 20-day moving average. Good rule of thumb, when the market's above the, whatever moving average you use, as long as the market is above it, it's a good time to be in the market. Look at what's going on with the market right now. A little bit of a curl over. The market hit a high on 11/19 since the last couple of days. Look at our candles. Our candles are red and getting bigger. The market's starting to pull back. So I've been letting people know by way of our daily color guard report every night that this is a time to start tightening the stops on the stocks that you own, number one, and to make sure that you manage the trades that you own with stops so that you know when to get out of them. And that's coming out to be really good information as the market is starting to pull down. Not telling you it's time to sell short yet or fully get out of your portfolios. Not yet. The market is still above that 20-day exponential moving average. The earnings per share is starting to pull back a little bit, but the volume is pretty steady on the market. Let's go look at the other indicator, which most people like to use. The S&P 500 looks a lot like what the VectorVest composite looks like. Above that moving average, but starting to peel off right now. Again, not the time to turn around and sell all of your stocks. Not the time to turn around and just say, man, I'm gonna start selling short. It's not that time yet. But now you have a better understanding of what news is affecting the market and how, by looking at the VectorVest composite and the spiders or the S&P 500, how that's affecting the market overall. I'm going to close out of that graph. Now I'm going to go see what questions that are here. All right, Make Me Rich. Hi, Sandbag Man. There we go. Fernando, we did a flash of a primary wave down earlier today. Well, we have to wait until the end of the day, Jay. Tuesday, but the global economy can drag us down. All right. Jay, you're typing a lot of stuff. Let other people type. Man. All right. Glenn is the best to learn. Thank you for that, Lisa. I appreciate that. Joey, we know it's Glenn. Whatever, Jay. Marijuana stocks rising. And that's something that we're going to pay attention to as well. Those are part of my stories today as well. The Chinese market seems, well, I'm not saying that. All right. Good time to short Duke. As a matter of fact, who's the number one basketball team in the country? Oh, yeah. It's the Duke Blue Devils. Just since you wanted to bring that up, Rich, since you really wanted to bring that up. All right. So there we go. All right. So I'm trying to make sure that I stay on top of, good afternoon, Chandra. I'm trying to make sure that I stay on top of all of the comments that are coming in. And I got that right here. I got that right here. Joey, I did say it once, Joey. Did you?
Comment on the video.
No, and I did I not, I want everybody in the room to understand, did I not say once already, don't forget to comment, like, and subscribe? Did I not say that once so far? All right, and when everybody's, no, I don't know. I did say that once, and Joey is egging me on.
Do this one?
What is, oh, I didn't do that one yet, no. All right, so,
You got me here.
no, so is it time to short Duke? Never. And Lisa says, hush, Joey. That's right. Thank you, Lisa.
Put her in timeout too.
Don't ever put Lisa in timeout, ever. Rich you can, but Lisa never. I made over 20 grand on OGI. I'm not sure what that stock is, and I'm glad that you have. Jake says this. That's Brian. That's Brian talking about the Celtics. All right, so let's move to our next story. Let me bring that up real quick. You guys are awesome. I love that you guys are here. Let's go to our next story. My next story happens to be on 5G. All right, 5G is on the rise again, or people want to think that it is, so we're going to take a look at it. 5G satellite stock Intelsat drops 40% after the FCC 5G decision. FCC Chairman Ajit Pai said in a tweet that his agency must free up significant spectrum for 5G communications, telecommunications. The FCC said it expects to begin a public auction of the C-band to happen before the end of 2020, a blow to satellite operators using the valuable spectrum. Interesting, huh? So the people who are doing satellite internet are the ones that are getting jacked up here because they need that spectrum for 5G, and Intelsat took the hit on it. Another company, Qualcomm, forecasts signals global 5G launch. Qualcomm beat the fourth quarter analyst estimates that included sharp declines from last year. The stock is jumping due to a solid first quarter guidance despite ongoing disputes with Huawei and missing Apple chip sales. The company forecasts, get this, 200 million 5G devices shipments in 2020. That's huge. That's going to be a big bump to the 5G industry. Now, the stock is at $90. The stock remains at a bargain. At $90, the stock remains a bargain with $67 earnings per share target before the benefit of the global 5G launch. So now, I'm going to point you in the direction of how to find 5G stocks in the VectorVest software, okay? Now, it's not going to be in my list here. I did have Qualcomm here, and I believe I do have Intelsat. Let's analyze those real quick. Intelsat got smoked. Definitely overvalued, but look at our proprietary indicators. Relative value looks at a stock's long-term price appreciation potential as compared to a AAA corporate bond. Would I rather own this stock or a AAA corporate bond over the next 1 to 3 years? Nope. Intelsat will be underperforming that AAA corporate bond, where Qualcomm, on the other hand, should outperform that AAA corporate bond by 26%. Relative safety. How safe is the stock? It's an indicator of risk for the stock. Right now, Qualcomm has got a relative safety at 1, which means that when earnings comes out, it has a 50% chance that it may meet or exceed earnings. Whereas on the other side, Intelsat is going to have a highly unlikely probability of hitting or missing or hitting earnings or growing or going higher than earnings anticipated. Relative timing tells me if the stock is in an uptrend or not. Looks at the short-term price trend. Qualcomm in an uptrend, above the value of 1. Intelsat way at the bottom of the spectrum on RT. Intelsat's going down. Qualcomm is going up. So two of the stocks talked about in the story, on those two stories, from the standpoint of 5G. One is a buy recommendation. So if I'm going to look for a stock in the 5G space, Qualcomm may be it, whereas Intelsat, which is that what did I just call that? Cable. Looking at it from a satellite perspective, really getting hurt. So now, those are only two stocks. I'm going to take you to a watch list within the VectorVest software. And again, this is more because of the benefit of the people who are not subscribers yet. if I go to overview watch lists, we've done presentations on 5G to the point that we've created a watch list of just 5G stocks. Right now, there's 45 of those stocks. I am not going to look through all of them. But what I will look at is a couple of things. Let's look at what the fastest moving stocks in the 5G area are. If we click on RT, that short-term price trend, the fastest moving stock in the 5G space is QRVO. All right, it's a nicely undervalued stock, good upside potential. This stock should outperform that AAA corporate bond by 21%. The safety, though, is not exactly where I would like for it to be. When it comes down to earnings, this stock may or may not meet or exceed earnings expectations. But what other thing I like, the stock is definitely in an uptrend. Look at that, and it's a buy recommendation. The company makes money, $6.26% forecasted. They're growing their earnings by 14% a year. That's not bad. Next one, AMD, Advanced Micro. Man, look at that. A little bit over its value, and we assign a value to every stock, what we feel the stock is currently worth. We'd rather have you in safe, undervalued stocks that are rising in price. This is a tad bit overvalued, good upside potential. The safety is there. AMD is going to do a better job of meeting or exceeding earnings than QRVO, but of course, this stock's in an uptrend. Buy recommendation, earnings per share 99 cents, annualized, forecasted, and they grow their earnings at a clip of 28%. This is the power behind having the VectorVest software in looking at any space to determine what stocks are best. So let's flip the script a little bit. Remember, I'm not going to look through all of these stocks. Apple is in this list, Skyworks is in this list, AVGO, oh man, Google's in this list, Alibaba's in this list, a lot of stocks are in this list. But what I'm trying to do is present to you and show you the power of being able to streamline what's working the best. Let's go click on earnings growth. Well, why is that? Because earnings is the engine that makes any stock go higher. Earnings is the engine that makes a stock's price go higher. So what stock in here has got the highest earnings growth? SSTI. Shot Spotter. How many of you know about that stock? How many of you know about that stock? And if you don't, then you know something. You've now been brought up to speed that there is a stock that's growing their earnings at a clip of 47%. Ericsson, all right, growing their earnings at a clip of 35. Let's go see. Someone is out. There's Nokia. Someone asked about Nokia. There it is. All right, Sandbag Man, do I want to get into Nokia? You know, let's do this. And I'm going to do this on the fly. Let's right-click on the stock. And let me see if this is a stock that I would want to get into right now. All right, woo! So Nokia, man, oh man, do I want this stock right now? I do like the rising earnings, but I don't like the falling price. Let's take a look at the other stocks that we looked at the top by way of RT. All right, let's go look at QRVO, AMD, and NVIDIA. I'm going to look at the top four. Let's look at their graphs real quick. Is that more of a stock that you would want to be in? Let's put on a 3-month graph. Not right now. QRVO looked great. Gapped up, really went higher, hit a new 3-month high, pulled back 4 days in a row. Maybe right now I don't want it. Apple, as much as I love this stock, look at it. What is it doing for the last 3 days? Pulling back. Now, NVIDIA, on the other hand, is a little bit of a sideways move, not pulling back off the high, but a little bit of a sideways move above that 20-day exponential moving average, approaching another level of resistance, which was created by the high, a little bit of indecision on the day. The next one, AMD, beautiful looking equity curve starting to pull back. As the market moves, so does 80% of the market, 80% of the stocks in the market. So even really good stocks will feel the pinch when the market starts to pull back. All right, so that was the touch on the 5G. Instead of looking at the individual stocks individually, we have a watch list of stocks in 5G. Another something to look at the watch list average. I'm going to do something else. I am going to view the watch list average of all 45 stocks in 5G. Someone said, well, 5G is, what about 5G? This is the average of all of those stocks. You didn't know you could do that, did you? You can go and get a watch list average. What is the watch list starting to do? starting to pull back intraday. It did fall below the 20-day exponential moving average. This is the kind of information that you want. Instead of just listening to someone say, hey, 5G is on the run. Or you watch television, hey, you got to get into 5G right now. Woo-wee, go. Nope. This is where the power of the VectorVest software informs you on what's truly going on to put you in the right spot to be when it comes down to getting into stocks. All right, someone says MGI. I don't know if that stock is here. Let me sort this by symbol real quick. And MGI is not one of the stocks that I have in 5G. But if it's a stock that you need me to look at, by the end of this session, I will be looking at some stocks for you. Rich says AMD has been on a straight up since the beginning of October. But if you look at AMD now, as we just did, are you ready to jump into it? Let's go back to it real quick. AMD, view the stock graph. And this is the cool thing. I don't care what you think. All right, I really don't. And I say that for a reason. Because the more you think and the more you invest with this, which is called emotional investing, the more you can put yourself in a bad situation. I love the earnings per share on the stock. Have you heard that there's a bad time to be in a good stock? Love the equity curve. Love the earnings per share. But what's going on right now? Do I want to put my money behind that stock, Rich, right now? All right, you're right. It's been going up, but right now may not be the time that I'm going to take it. And if you were playing calls right now, you need to take some of that off the table, Rich. You know better than that. All right, and if you were buying calls all the way up, that's beautiful. Well, look at what's going on in the market now. Not only is it falling down, look at the volume behind it. People are actively selling the stock. That's a lot of volume on that move to the downside. So again, I am not here to say, well, what you think is, listen, I take that off the table. Let the power of the software walk you through what you need to do. All right, so there we go. Let's get to our next story. All right. The next story is about weed. Woo! About weed. All right, this is big news. The House panel passes a bill to decriminalize pot. The House Judiciary Committee, controlled by the Democrats, has voted 24-10 in favor of a bill to decriminalize marijuana. This is on the federal level. All right, and that's huge because the individual states can legalize marijuana, but if you're going against the federal law, you could still be in trouble. So now we're getting to a point where we are legalizing it. There's a bill in place to start to decriminalize it, and it was passed to decriminalize it on the federal basis. Several Republicans on the committee backed the bill as well, all right? Dubbed the Marijuana Opportunity Reinvestment and Expungement. Oh, more. How about that? I like that. It's the MORE Act. You want more? I don't want more. Listen, I'm not going down that slippery path, all right? The legalization, if enacted, will also expunge prior marijuana convictions. That's huge too. Encourage resentencing hearings for people still under the supervision establishes a 5% tax on marijuana products aimed at funding grants. You know something? You know the government was really going to back behind marijuana when they can get some money behind it. When they start taxing it, people are going to be buying it. And they're going to be like, yo, baby. It's going to be like that. I don't know that. I don't know that. I'm just watching talking about what I see on TV. All right, that's big. Legal aid services ensnared on the war on drugs. So now, that is interesting. Let's go back into the software. I didn't do it the right way. Let's go look at our marijuana stocks that I have up here. Let's go back to my 1121. And let's go look at some of the most popular marijuana stocks. CGC is one of them. Let me sort this by symbol. All right, let's do it that way. CGC, Kronos, Tilray, ACB. And then I have really, I hate when that happens. A refresh, you know something?
Click something. You just click
I didn't click it on you. That wasn't my fault.
All right. ACB,
CGC, Cron,
MJ.
was one more.
Tilray.
Tilray. All right, so here's the stocks. Let's analyze them real quick. So somebody says, well, and marijuana stocks are on the rise. I want to show you something. Sell, hold, sell, sell, sell. All right, you ready to buy marijuana stocks yet?
Nope.
We'll talk about that. All right, this stock is fairly valued. Long-term upside potential, not there. Safety, not there. The stock's in a downtrend. Earnings per share, negative. Canopy, a little bit overvalued. Upside potential, not there. Safety, not there. Timing, not there. Hold recommendation, negative earnings. Cron, way over its value. Upside potential, not there. Safety, not there. Timing, not there. Stock is a sell. They got 11 cents. You know something? Cron, though, is at least growing their earnings by a rate of 16% a year. This is the one that I want to look at. This is an ETF that looks at marijuana stocks as an industry. All right? Relative timing, not there. Sell, of course, no earnings per share on an ETF. And Tilray, way over its value. Look at that, way over its value. Upside potential, not there. Safety, not there. Stocks in a downtrend. Negative earnings, and they're growing it in a negative space. So anybody who's out there telling me that, well, marijuana stocks is a good way to go, and Rich is going to say he made 220% on an option. Rich is a lot more, and I want everybody to understand, Rich is a lot more aggressive than the majority of the people in this room. Because he made that money, do not get your eyes all starry-eyed over. One, many of you don't play options, which I think is a bad thing. You should be playing options, number one. And number two, a lot of his option trades are very short term. So I want everybody to understand that what Rich is typing in the room is great, but is a lot more of an aggressive play that many of you are not in the game to do. All right, let's take another look. Let's take a look at the graphs. So notice ACB. Now what I do like is the rebound coming off of a low. I like the rising volume to come along with it. Am I ready to pull the trigger on it? Well, what moving averages do you like as a way to determine whether or not it's good to pull the trigger on? If I'm a swing trader, I like that 20-day exponential moving average. Am I going to tell you that it's not going to keep going up? I am not telling you that. And look at the big wick at the top of the candle. A lot of selling pressure. Even though a lot of people jumped on board, a lot of selling pressure on the candle today. Let's go look at the next one. CGC. I do like that it went above its 20-day exponential moving average. Look at the big wick at the top. A lot of people, even though it made money, a lot of people taking profits. Why? Coming off of this low, gap up, gap up. Who do you think is sitting in a stock that's made a lot of money from 14 bucks now up to almost 20 bucks is still sitting in the stock? They're taking their profits. That's what that long wick is showing at the top. Next one, Cron. All of these stocks coming off of lows. I love that they're moving higher. I would definitely wait before it breaks until it breaks above whatever moving average I'm going to use. Love the rising volume. It's not above my 20-day exponential. Look at the give back. Again, a lot of people making money from 6 bucks all the way up to 8 bucks. That's a lot of profit taking right there. Next one. This is the industry ETF, MJ. Like marijuana, Mary Jane. That's a song. That was a Rick James song. I don't know anything more about it. But I do like the rising volume. I do like the rising interest in it. If you're going to pull the trigger on any of these marijuana stocks, all I'm saying is wait until it crosses whatever moving average you want to use. And could you be buying low to sell high? Absolutely. I am not telling you not to buy it. I am telling you to wait for some form of confirmation before you pull the trigger on the trade. All of these are looking the same way, coming off of a bottom, moving up. Tilray just went above the 20-day exponential moving average. And all of these have rising volume. There's a lot of interest in marijuana stocks right now. Just let the trade come to you. Don't rush the trade. Does everybody in the room understand that? All right, I want a visual representation that people understand what I just said. I am not telling you not to get into marijuana stocks. What I am telling you is wait for a confirmation of the trade before you pull the trigger. No one is saying that they understand. How much of a delay I got today?
They caught up.
Oh, they did? All right, I'm just curious to know, how many of you understand what I just said in regards to the marijuana stocks? I like that it's moving. Let the trade come to you. All right, that's all right. You ain't got to like it. Don't matter to me. It don't so matter to me. All right, so let me close that out. So those are the stocks that I was looking at from a marijuana perspective. I do like that marijuana might have found a bottom, and it is moving up. But notice a lot of the wicks, the big wicks at the top of those candles, a lot of people are taking profits off of that nice move off of the bottom. Let the trade come to you. Let the trade come to you. All right, let's get into the next story. Boop, boop, boop.
Thank you for commenting, liking, and subscribing.
Thank you, Joey. Wow.
What part were you going to talk about Tampa?
I'll talk about Tampa.
What part though?
Leave me alone. Who's doing this?
I mean, I'm just
No,
trying to get a feel for when that's going to come.
We're gonna come. We're gonna talk about Tampa. All right. Wow, Joey.
I'm going to get you high today.
No, don't start with me on that. You're running my pressure up. All right, the next segment, and I know, see, look at Rich. Rich, you saw what Rich just typed in? Yeah, whatever. All right, why don't you give Joey the big chair? Why? Why am I gonna, why I got it? Joey's got a chair just as big as mine, you just don't see it. All right, now we're gonna get into some seasonal retail stocks. Target, big move. Target's apparel sales on fire. That's bad news for everyone else. I don't know if that's really bad news for Walmart, though. All right? Target's apparel business is outperforming other categories. We are picking up market share from a number of competitors, whether it's department stores or specialty. Target CEO Brian Connolly says in a phone interview with CNBC. Apparel sales are up more than 10% during the last quarter, which helps strengthen Target's profit margins. So, for those of you who like Target, let's go to another one. Tiffany. This is the season to give jewelry, right? Tiffany is up 4.7%, and that was as of yesterday on a report LVMH boosts offer. So Tiffany was in talks to be bought by LVMH. Those talks disseminated, and now they're bumping up the offer. Postmarket wrote that it has raised this offer for the company to $130 a share and got access to Tiffany's books. That's huge. That is huge. All right. So let's go down a little bit. They closed today, that was yesterday, at 123.33. The new reported offer marks a 5.4%. So the people in Tiffany are like, yeah, baby, give me. When they say, what is it in the movie? Show me the money. That's what Tiffany is saying about LVMH. And LVMH is going, yeah, baby, I got your money. And go make it rain. So maybe that's what it's going to be all about. So that's on Tiffany. Another big name, Macy's. Macy's online sales growth slowed. Macy's been around since forever, right? But that also means it's more profitable. Macy's says its online growth slowed during the fiscal third quarter. As a result, the retailer says it had a lower than expected headwind from delivery expense associated with our digital business. So you remember, if you're going to get a lot of stuff online, a lot of them pick up the cost of freight or shipping, right? If the online sales for Macy's is going down, guess what? They don't have to pick up the freight. Interesting. That is an interesting stuff. Macy's earnings tops expectations. So that's Macy's. Let's talk about somebody else. Oh, Walmart. Walmart posts strong results ahead of holidays, earns praise from Trump. Walmart Incorporated raised its annual outlook on Thursday as a robust economy. Remember, now you understand how all of this piggybacks, right? We talked about what's going on in the economy. We talked about interest rates and how that affects. So now, based on a robust economy, people have got more money in their pockets to spend. They're going to go to Targets. They're going to go to Walmarts. They're going to go to Macy's. They're going to go to Tiffany's. So all of these companies overall are looking good coming into the holiday season. The world's largest retailer posted better than expected earnings, comparable sales, and e-commerce growth in its largest market during the third quarter. It now has posted more than 5-year streak of U.S. growth, unmatched by any other retail chain. Now you know why Walmart is the biggest selling physical store, where Amazon, on the other hand, is the biggest online store. All right, and that's what I've got for retail sales. Let's go back into the software. Let's go find my companies for retail sales. Target, it's at the bottom. There's Target. Amazon. All right, we didn't have a story on Amazon, but Amazon is the biggest online business. Walmart, bingo. Macy's, bingo. And Tiffany, bingo. Here's our 5 stocks in retail. Amazon, grossly overvalued. All right, upside potential, good. Safety, good. What's hurting it right now on Amazon? It's going down in price by way of RT. RT tells me that short-term price trend of Amazon is in a downtrend. It's a hold, but they are growing their earnings at a clip of 30% a year. Let's look at Macy's. Slightly under its value, good upside potential. The safety is not there. When it comes to earnings, it may or may not meet its earnings expectations, and the stock is going down in price right now. It's a sell recommendation. Good positive earnings, negative earnings growth rate. That's never a good thing for a store. Target, right at its earnings, right at its value, fairly valued, good upside potential, good safety, and definitely with that news, it is definitely in an uptrend. How about this is one of the 5 that's got a buy recommendations. Earnings per share is $6.47, and they're growing their earnings at a clip of 15%. Man, Target looks strong, doesn't it? Tiffany's, a company that's been around. It's the buy place for the rich and famous, right? One of them. Tiffany's big time jeweler. Relative value, long term, may not want to own Tiffany right now. It's got a good safety and it's got a good up, and it's moving up right now. Long term though, be careful. This is probably a good shorter term trade. It is a buy recommendation. It does have positive earnings and growing their earnings at a clip of 7%. Walmart, what's more to say? Walmart is overvalued though. Good upside potential, good safety. It is in an uptrend, not by a lot, but still in an uptrend. Hold recommendation. It's got earnings per share positive, and they grow their earnings. This is the 3rd out of the top 5 or so, 3 out of 5. It's falling number 3 as far as growing their earnings. That's a big conglomerate. And 14% a year on a store that big, that's good news. All right, so, but which one is the most diversified? When you say most diversified, I'm going to say they all are in one industry, Jay. They are all in one industry. So keeping that in mind, I don't know where the diversification, this is all in one industry. So let's do it this way, Jay. Jay, I'm wondering, is asking which one is the better one to get? Target, look at Target. Put this on a 3-month graph, love it. Target's moving up, gap up yesterday, follow through today, a little bit of a give back. Look at the little bit of indecision on the stock today, but overall, over the last 3 months, earnings looks good. Volume, big pop in volume yesterday. Let's look at the next one. Woo! Amazon, boy, oh boy. As much as I love that Amazon is big boy in the online retail, right now may not be the right time. It's below my 20-day exponential moving average. It did move sideways for a little while, but it's got a level of support sitting at about 1690.03. 1690.03. All right, let's go to the next stock. I'm not a real fan of Amazon right now. Walmart, a little bit of a sideways move right now. It's got a good level of support, sitting at 118.17. Love the rising earnings. Watch the volume. Well, the volume will pull back as the stock starts to move sideways, so that's not abnormal. But I am looking currently above the 20-day exponential moving average. It is trading right at the floor. If it falls through the floor, that's where you get concerned. If it falls through the floor, that's where he gets concerned, but that hasn't happened yet. Let's go to Macy's. A lot of sideways move, right at support as well, at $14.16. Watch the earnings per share. The earnings is the engine that drives the stock's price higher. Falling earnings, what do you think is going to happen to the stock? All right, so just keep that in mind. And the last stock should be Tiffany. Man, with that buyout type of situation, gapped up, it's just hanging out, waiting for the deal to go through. All right, and once it goes through, Tiffany will go away, and it will be LVHM, whatever the company, Tiffany will go away. All right, be careful with this because once the deal is done, remember they put in the order they put in the offer at 130. They put in the offer at 130. The stock's price will rise up there, and it'll stay there. All right, so that's on my retail sales. Let's go see the questions you're asking. Amazon. I like Amazon. I'm not feeling Amazon right now. I do like Target. Target looks good. I do like Tiffany's. Tiffany's looks good, but I do know that Tiffany's in talks to be bought out. Be careful with your Walmart. Be careful with your Macy's, and be careful with your Amazon. All right? Is he here, Abby Normal? Don't start, Jay. I love that movie. Breakfast at Tiffany's. Can Glenn remember the theme song? I know he can sing it. Oh, no, I don't remember the theme song for Breakfast at Tiffany's. So if I don't remember it, I can't sing it. All right, let's get to our next story. The next story is about energy. All right, New Jersey ramps up targets as it looks to go big on offshore wind. All right, so that's one part of energy, and looks like the governor of New Jersey is going to put a big investment into going with the wind technology. The next story is going to blow your mind. All right, the next story is going to blow your mind. How many of you are Ford fanatics? How many of you like the Mustang? How about the Mustang Mach-E takes a shot at Tesla? The Tesla Model Y and Ford Mach-E are expected to feature similar pricing. Performance specifications in EV range, second, blah, 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 blah. How about, folks, we getting ready to get an all-electric Mustang. Holy smokes. How about that? We're about to get an all-electric Mustang. Ford reveals its first mass-marketing electrical car, the Mustang Mach-E, which is all-electric, that bears the name of the company's iconic muscle car at a ceremony in Hawthorne, California on November 17th. Man, it looks terrible?
That doesn't look cool.
That looks cool. Anybody think that looks ugly?
It looks like a ball.
It doesn't. It looks hot.
It doesn't even look like a Mustang.
You don't count right now.
That's not.
Does anybody else think that this is an ugly looking car? I'm curious to know. I like the look of that car. Does anybody think that's an ugly looking car? Mustang E SUV looks sweet at $45,000.
They don't have the heart to tell you.
They got the heart to tell me. I like the look of that car. Does anybody not like the look of that car? All right. Anyway, let's go.
Like a crossover.
It doesn't look like a crossover. It looks like a Mustang. I'm not talking to you anymore. Let's go to another car. Wow, Rich said ugly. Put him in timeout.
It's in time.
Put him straight to timeout.
It's uglier than that Duke Cup.
It's not uglier than the Duke Cup. You're such a hater. You are such a hater. Now I'm going to show you another car. Volkswagen breaks ground in Tennessee. I like that. On Tennessee, so in the U.S., electric car factory to battle the Tesla Model Y. So Ford is going after Tesla. Volkswagen's going after Tesla. Volkswagen to break ground eminently on a factory expansion in Chattanooga, Tennessee. I love that a lot of these companies that are overseas are building a lot of their stuff over here in the U.S. All right, over here in the U.S. And Rich said that was the first time he agreed with you. All right, where the capacity will be, how about, they're going to put out about 200, they're going to put out about 250,000 cars a year. Man, that's going to be a lot of cars. I love Volkswagen. I actually have a Volkswagen. I don't have it. My daughter's got it, but I love Volkswagen. I love Volkswagen. All right, so those are my stories on energy. All right, you notice we talked about wind energy. We talked about electric energy. Now, I'm going to take us back to, what am I looking for now? I'm going to look at Ford. I'm going to look at oil. I'm going to look at Volkswagen. I'm going to look at energy, and I'm going to look at natural gas. All right, I'm just going to go straight to the graphs for these. All right, let's start off with Ford. Ford, this story may bolster Ford. All right, it may bolster Ford, but right now, it hasn't yet. The stock is a little bit more in a channel between the range of 880 on the upside and 848 to the downside. Ford is a lot more in a channel right now, but maybe this news could bolster it. And if I'm thinking about that, let's wait and see if it can break above whatever moving average you're comfortable with. In my case, I'm using the 20 exponential. I'm using the 20 exponential. All right, let's go to the next one. Oil. Look at that. Oil is on the rise, breaking out of a level of resistance at 1217. So oil on its own merit is rising. No earnings per share on an ETF. I do like that. Now we're going to move from oil over to Volkswagen. Again, an electric car. Volkswagen was already moving up prior, unlike Ford, right? Volkswagen was already moving up, right now leveling out with its story about its electric car. Let's see what the news can do to it. If I'm looking to get into the stock, let's see if it can break above the 3-month high. I like that most recently the stock has gotten a buy recommendation. And look at that earnings per share. I don't like the volume. I don't like the lack of the volume, but I do like the earnings per share and I like the equity curve. So Volkswagen may be something to look at. Now, energy as a whole, I know, Joey, I'm running a little behind. Energy as a whole, looking at oil, looking at electric, looking at gas, energy as a whole is doing a little bit of a bounce right now, breaking very close to breaking out of its level of resistance, sitting at $60. So energy as a whole is on the rise. Let's go see what happens. And let's go look at natural gas. Whew. Natural gas is taking it on the chin, big time. Oil looks better than natural gas, but you know why? It's because so far it's been kind of a mild winter. We had a cold snap for about a week here in North Carolina, but right now, what's my temperature sitting at right now? We're at 60 degrees. We're at 60 degrees. So with mild weather, natural gas is going to get hit. Wait till it starts getting cold, gas will start popping. All right, gas will stop popping. All right, let me see if there's anything here. Ford owns Mazda. I didn't know that. All right, I didn't know that. And there you go. I'm going to click on show because Tom is right. This stuff really works. Like, subscribe, comment, please. There you go. Thank you, Tom. Tom is doing that for me. That's right, folks. Don't forget to comment, like, and subscribe. Can we type our stocks in the room? No. I'm running late, Rich. Don't put your stocks in the room yet. Take a Duke cup, put it in the car, and light it on fire. You're a hater. You never say it's enough. Well, everybody's telling me I don't say it enough. Well, like, subscribe, huh?
Badger nose?
Everybody knows more than I do.
I know.
Remember, folks, if you like what we're doing here as far as the presentation of the stocks that we're looking at, the stories that we're looking at, don't forget to like and specifically comment. Once these videos are released, comment on them. Let me know what you feel about them. And subscribe if you haven't already subscribed. All right?
So when I break these up, if you say it, it might actually be in one instead of just at the front one.
Wow. All right. Joey is really getting on my nerves today. All right. Yeah. And let's get to our I'm not talking to you right now. We're gonna fight in a minute. Oh my gosh. Stream Wars. Let's go do this real quick. Welcome to the Stream Wars. All right. So you know that the Stream Wars is kicking in. How about Disney released last week? How about this? Disney released in one day 10 million streaming signups. That is huge. Holy smokes. 10 million in one day. That is amazing. But there was a lot of anticipation behind the whole Disney release. I now have it. Joey has it. It's got the biggest thing about me and Disney is that it's got more content than anybody else out there. It's got name recognition. It's Disney. It's got name recognition. I still feel that Disney is going to be the stock to look at in this whole streaming business. All right, let's go to the next one, which is Netflix. Netflix is now trying to link up with some other people. Netflix, Nickelodeon team up on content deal. So what is Netflix trying to do? Netflix is trying to be more like Disney, giving you kid content. That's not a bad strategy. Nickelodeon have announced a deal to make original films and series based on Nick's child-friendly character library, including completely new character. This deal is worth over $200 million to Nickelodeon. This includes a spin-off of SpongeBob SquarePants. Who doesn't like him? Who doesn't like him? I like him, and like Squidward too. The deal's got interesting timing, coming a day after the launch of Disney. You don't think they planned that? You don't think that Netflix planned that? This is why this is called the Stream Wars, baby. You don't think that they planned that? So that was on Netflix. Apple. How about Apple's jumping in? Everybody, now that the pot has been stirred, everybody wants a little taste of what's out there as far as the streaming community is concerned. Apple is planning subscription bundle. That comes from Bloomberg. It could launch the bundled digital media subscription as soon as next year. The bundle will include Apple News Plus, TV Plus, and music into one paid service. So Apple, you know something? I think that Apple missed the boat on the stream way back in the days when they had that. They never really pushed their Apple TV as much as they should have. They were concentrating on the phones. They were concentrating on the tablets. They never really pushed, and they could have really taken over prior to Netflix. They just never pushed it. Apple's News Plus launched in March for $9.99. TV Plus became available to start in November for $4.99, with 4 shows getting the big promotional treatment. Yes, I signed up for Apple, and I also signed up for Disney. So who cares? I love all of this stuff, and I have Amazon. The only thing that I don't have as far as streaming is Hulu. That's the only thing that I don't have. All right, let's go over to one more. How about the former, so this goes along with the Apple side. Former HBO CEO Richard Plepler is in talks to create original content for Apple TV. Man, so what's going to be the difference between what Disney does and what all of these other people do? Because Disney's got such a vault of content, Netflix, Apple, Amazon, they all need to come up with a lot of new content. So you know something, if you write movies, man, these streaming people are going to be able to jump all over all these people who are trying to get streaming content. There's a lot of creative people out there, and these companies are going to be looking for them. One last thing, Viacom. Viacom CEO, we will bring a different approach to compete in streaming. Whoa! Now we got somebody else stepping into the ring. Ding, ding, ding. Now we got a cage death match now. Viacom comes on. We're bringing a different approach to the marketplace, one that combines free and paid in the quest to compete with the streaming soon-to-be Viacom CBS CEO Bob Bakish. We already have particularly on Viacom CBS basis, a nice bouquet of paid products. We'll use those on an integrated, you know what I'm saying? And you'll see us prosper in that space as well. So how about Viacom is jumping all over that too? Everybody is going to do it. Siborium says direct to streaming is what direct to video was in the 80s and the 90s. I got you on that. I got you on that. All right, let's go look at these stocks in our watch list. There we go. So what do I have here? This is where I have Amazon. Is this where I had Amazon,
Yeah.
Joey?
Yes.
Yeah, this is where I had Amazon. Let's go look at Disney, Netflix,
Apple, Viacom, and Amazon.
Where's Apple?
Gone.
Apple's gone. Ain't no Apple when it's gone. Viacom.
Scroll up.
There it is. Apple. Okay, good. Let's take a look at these real quick. Apple, fairly valued, upside potential. Not there on Apple. It's got a good safety. It's moving up in price. It's a buy. Long term, though, be careful trying to hold Apple long term. Negative earnings growth. Woo! Amazon, way over its value. Good upside, good safety. What's hurting Amazon right now is going down in price. Disney, way over its value. Long term, not ready yet. The safety is there because it's name recognition. How about now with the release of Disney Plus? The stock is now in an uptrend. Hold. Negative earnings. Why? They spent a lot of money into the promotion and release of the app. All right, Netflix, overvalued. Good upside potential, good safety, and moving up in price. Netflix is the only one besides Apple that's got a buy recommendation. How about they're growing their earnings? Netflix is still growing their earnings at a clip of 28% a year. Viacom's now in the mix, fairly valued. Upside potential, not there. Safety, not there. Stock is moving up. That's probably because of the news. Hold recommendation, the stock is positive earnings. They're not growing in a double-digit earnings growth. Let's look at the stocks real quick. View the stock graph. Netflix is probably the best one still to look at. Everybody's coming after the big boy. Everybody's coming after the big boy, Netflix. Netflix is probably the still best buy right now. Everybody else, Apple TV, just getting off the ground. Disney, just getting off the ground. Viacom, trying to get into there. Amazon, right now, pulling back right at a level of support right here. Earnings per share, I'm not feeling Amazon. Disney is going to be starting to rise. I love that all of the talk prior to releasing the app. Look at the stock's price move up. Right now, people are still trying to digest what's going on with it. 10 million subscribers in one day is freaking amazing. All right, let's go see what happens with it, though. Watch the volume, though. That makes sense with the stock's price moving sideways. Wow. And again, what did I just say? Netflix looks like the best out of the breed still right now, but everybody's gunning for Netflix. Everybody's gunning for Netflix, and right now Netflix is still the lead dog. Netflix is still the lead dog. Love the earnings per share. Volume is steady. Stock's price is moving high. How about right now, as of today, the stock is hitting a new high over the last 3 months. Viacom. Again, right now, this is new for me. I know they have CBS, but they're really trying to go after, as you saw by way of the news, they're really trying to go after into the streaming market. I'm not feeling it yet. I know that it's above my 20-day exponential moving average, but pulling back. Watch the earnings per share. All right, and last but not least, Apple is just a great stock. Moving up, pulling back though, I probably would be careful. Pulling back right now and leave it be. All right. Let's go look at whatever comments you have. How come you don't use your performance graph to compare these stocks? Because in order for me to use my performance graph, they all need to be in their own watch list. You talk about performance graph. Well, it's because I'm already back on time, Joff. I can, but I'm already back on time, so that is the reason why. Did you tell them you really told them to type the stocks in the room already?
I'm ready.
Holy smokes, everybody's ready. All right, here you go. Wow, Joey's he's that kind of guy today. Let's go look at the stocks. I don't like you right now. Okay. XOM, BDSI. Now I'm going to give you an opportunity to put your stocks in. Let's take a look at them. SLDB. We looked at the stocks that were in the news. We analyzed them, and I'm going to do the same thing with your stocks right now. Peep Tesla. I like that. Somebody's told me to peep Tesla.
Peep.
Woo!
Did you get GPN?
GPN? I don't know,
Earlier.
GPN,
Yeah, PG&E.
PGE, no, which PG, the electric company?
Just as PG&E.
PG, I need a ticker symbol on that, or company. And I'm not typing that, Rich. Moon River, did I get BLDR? Nope. BLDR, that's an ETF for the builders. No, that's not the ETF. That's NAIL. NAIL is the BDF. ADSK, JP, Joey has to give us 30-second lead time to offset the YouTube lag. Oh, PGE, that is what you want? That doesn't, it says OP. I'm not getting that. PGE, why is it not coming up? Is it OpGen? That's not what you want. Is it PCG? There it is. It's PCG. I had to. All right. It's PCG. I got it. Saborium gets it. What does Saborium says? Joey has to give us. Okay. All right. That's it. You down with OPP? Oh, I'm not doing that.
No, me.
I'm not. I'm married. I ain't down with that. All right. Put these on a 3-month graph real quick. Exxon, which is ExxonMobil, big up day today. Long term, no. Rich probably put that in because he got a good something on it to show that it was going to explode, and it did. Long term, though, earnings per share doesn't look good. Stock's a little bit in the channel, but good day today, and it did break above my 20-day exponential moving average, and the stock is a hold. But good day today, nonetheless. Option play, man. That's a good play. BDSI, drug biomedical, love the stock. Earnings per share, definitely moving higher. Love the equity curve of the stock. Stock is moving a little sideways right now. Just be careful of that. Be careful of that. Red bar today because the bar is lower than it was yesterday, but it's an open candle, which means the price started at the bottom of the candle and went up. A little bit of give back, a little bit of selling pressure with the wick at the top. Love to see if the stock can get above that level of resistance. Next stock, EWT, that's an ETF. You know something, I got issues with stocks that gap, especially ETFs that gap up because they have a tendency to gap down. But overall, the ETF is above my 20-day exponential moving average. It's doing a good job keeping you in it if you're investing in it. Not a bad deal. That's a beautiful support line by way of moving average on the stock. I do like that. But just be careful. As quickly as it can gap up is as quickly as it gaps down. But as long as you use that level, in this case, the exponential 20-day moving average, it does a good job of making sure you stay into it. So I do like it from that perspective. SLDB, man, stock got smoked. Woo! Big time. Starting to rise again. It's starting to do what I like to call fading the gap. I do like that. The stock's earnings per share is getting less worse. All right, it was worse, way worse out back here. It's getting less worse. I do like that. If I'm going to play this to ride the stock up into that gap area, how about I give you a level of resistance at 1042? All right, that's where the gap happened. That's probably a good time to take profit off the stock. But if you're going to buy into it, make sure you buy into it on a rising day. As the stock's price is rising, though, this is also what catches my attention. Watch the volume. Volume's pulling back. If the stock is moving up, I want to make sure that people are pulling the stock's price up. All right, that it's not being manipulated internally. I want to make sure that I've got rising volume. All right, so just keep that in mind. I do like the coming from the bottom. I do like that. That is a bullish harami with follow through, and it's fading the gap. I like it from that perspective. Just make sure if you're not in it now, buy in on a up day. Activision, moving sideways. That's it in a nutshell. Activision moving sideways. Watch the earnings. Earnings is falling. If rising earnings is the engine that makes the stock's price go higher, imagine what falling earnings does, okay? Stock is moving sideways. That's it. And it's in a channel within a channel within a channel. All right, there's a lot of moving parts, but not really taking off, not really falling down. Channel. Just be careful with it. If you're going to play it to bounce off the levels of support or the retracements off the levels of resistance. All right, let's go to MasterCard. Nicely moving up. All right, I like that it's breaking out of two levels of resistance, breaking up. Watch this, though. With today's activity, it's coming down to test this former level of resistance of 280, as the level of support. If the stock's price can stay above it, that's a good. If you're already in it, you're going to be fine. If you're not, if you're in it and you need a way to get out, that's going to be your line in the sand. If the stock's price falls below that level of support now, that's probably a good reason to think about getting out of it. But the stock's price is moving up. I would love to see it move higher. The stock is a buy recommendation. Next stock, Tesla, rocking and rolling. Good, Gordon, Jin. Love the earnings per share. What I don't like, though, is the stock's price is moving up. Look at volume. All right, I remember, volume is conviction. I want the stock's price to go up with rising volume, rising volume. Stock's price right now is moving sideways. Well, I don't want to be in a sideways moving stock. I want a stock that's going up. I want a stock that's going to make me some money. All right, if you're in it, though, and you need a way to get out, I would look at this level of support right here. I'm going to draw you a line real quick. Good level of support, sitting about 343.52. All right, that's a good level before it breaks back down. 343.52 is a good line in the sand for Tesla. Go to the next one, GPN. Woo, looks good, but pulling back. Looks good, but pulling back. I love the earnings per share, but the price action, you know what that's called right there? A little bit of a hanging man with follow through. Candlestick pattern known as a hanging man with follow through. That could be, if you're in the stock though, if you're in the stock, don't be afraid to take profits. Don't be afraid, because all of this can keep on doing is keep falling. If you want to give it a lot more room, how about this 20-day exponential moving average? That's a good way. If you want to give it a little less room, how about the 8 exponential moving average? All right, that tracks it well as well. If you want to get out of it a little quicker, the 8 exponential to get out of it. But I got a candlestick pattern with follow through. That in and of itself may be a good opportunity to say take your profits off the table, especially knowing the market is starting to pull back a little bit, right? Don't be afraid to take money off the table. Builder, moving up. Found a high, 3-month high 2 days ago, big down bar today, breaking below the 8 exponential, not breaking below the 20 though, not breaking below the 20, depending on how quickly you want to get out. Love that equity curve, love that earnings. Right now, one day doesn't make a trend, right? But that's a big down day compared to a lot of these other candles. Just be careful with that. Make sure you have some semblance of a line in the sand to get out. Actually, I'm going to give you one right about here. Oh, right, look at that. Good level of resistance, good level of support. How about this level of 24.75? That's a good level if you're already in it. That's your good line in the sand right there, folks. As a matter of fact, that's a beautiful line in the sand sitting at about 24.75. All right, the builders were rocking and rolling as an industry. Don't be afraid to take your profit off the table. Let's go to the next one. ADSK, Autodesk, beautiful moving up. A little bit of give back right here yesterday. A little bit of indecision here today. It's above the 20. Let's go put on the 8. Again, I like the 8 exponential as a means to get out of the stock a little faster. All right, look at that 8. It's still doing a good job. If you're in it and you're making money, think about putting on something like the 8 exponential. It'll do a good job and get you out at the right time. All right, let's go to the next one. JP, sideways, at a level of support. That level of support is sitting at about $1.75. Oh, that's not JP. That's Jupai. Jupai, hello, Jupai. You know something? When we go to the store, Jupai my lunch for me. Listen, that was funny. That was funny. Anyway, how many people are going to laugh? I'm excited to know how many people are going to laugh. I think that was good. Oh my gosh, that was just funny. Anyway, stock is trading at bouncing off a level of support. What I don't like is the earnings per share getting worse and worse as the stock's price is moving sideways. All right, and the last one is PCG. Stock, again, this is another stock that's moving sideways. I think that we'll see what happens. They did admit that they caused one of the 12 fires that were going over in California with their electrical equipment. We'll see what happens with that. But the stock is moving sideways. Stock is definitely moving sideways. All right, so there we go. That's all of your stocks that you gave me. I do want to talk about one other thing. Thank you all for being here. But we do have a big event coming up in Tampa in January. All right, it's called our Tampa 2 Day. We'd love to have you there. Joey's typing a link in the room. All right, not Torque, type her link in the room. All right, click on that link, folks. Sign up for it. If you want to learn more about this VectorVest, so let me back up a second. If you like what we've done with utilizing the VectorVest software to analyze stocks, then you want to learn more about it. The good way to learn more about it is to go to the Tampa 2 Day seminar. It's going to be in Tampa, Florida for 2 days. You will know every bit and piece of how that software works to use it better for your investing. All right. If you don't want to go in person, we do have a live stream so you can watch it from the comfort of your own home for those 2 days as well. Joey put a link in the room. It's www.vectorvest.com/Tampa. You will be given an opportunity to sign up. And folks, whether you are a subscriber or not, especially my subscribers, you want to learn more and get your investing on a whole nother level, we always release new products at our Tampa 2 Day, and I don't think that this year we will fall short of that. All right, so just keep that in mind. New people, you want to learn more about the software, you can always give us a call. Type the number in the room for me, Joey, 888-658-7638. For those people who are brand new to the software, you want to learn more about it, call our product support staff. Let them walk you through some of the expectations you may have about the software or to answer any questions that you have about the software. All right. Also, don't forget to comment, like, and subscribe. Joey and I do a lot of work to put this together for you. We enjoy it, believe you me. Yeah, we do. I'm talking on behalf of Joey, whether he likes it or not. And Joey, you're going to like it whether you like it or not.
Like it.
All right, he likes it. All right, and we really want your comments. When Joey does put these videos together, folks, we want your comments. So comment on the videos. I do the best that I can to personally answer any questions that you have directed towards me. So that's what we do. Remember, folks, comment, like, and subscribe. If you haven't already subscribed, do that. Click the little bell icon so you'll be alerted to when we have new videos come out. But it's every Thursday at 2 o'clock with the exception of next Thursday. Why? Because next Thursday is Thanksgiving. So what I'm going to do before we leave, I am going to end up this way. Okay? Thanksgiving is coming up. We are blessed to be here in this country and on this earth. It is a blessing. When you go and think about Thanksgiving, spend it with people that you love, and even with people you may not love. You know, be thankful that everybody is in everybody's life for a reason. Whether it's for a reason or a season, they're in your life for a reason. Don't forget that. Don't forget to be thankful for all of the blessings that you do have. All right, and if you can share food or fellowship with someone, don't be afraid to do that. All right, don't be afraid to do that. We are called to be stewards and love on each other. So don't forget to do that. It is Thanksgiving, so I will be at home loving on my family. Hopefully you guys will be at home loving on your family. So we will not be here next Thursday, but we will be the Thursday after that. So with that, folks, happy Thanksgiving. God bless you all. Thank you for attending these because you guys are part of my blessings. All right, I want you all to know that. You guys are part of my blessings, and I thank you each and every Thursday for being here to spread some time with me, and I ain't afraid to say it. Don't care if you don't like it or not. Listen, I know who I am and where I stand, and I'm thankful for all the blessings that you guys put on upon me as well. So with that, from Joey and I, happy Thanksgiving. Thank you for being here. We look forward to being here in 2 weeks. Adios, arrivederci, ciao, au revoir, sayonara, later.